Well, g'day there, traders and friends right around the world. Thanks for joining me on this Monday afternoon market recap. Before we get into the three US markets, what I'd like to do to begin with is just reference a trade which we spoke about over the weekend. That trade pertains to the silver ETF, ticker symbol SLV. As you can see on my screen right here, we had a very nice little bullish entry here, around $15.44. You can see on today's candlestick, we had a very strong gap up off from the support level. And the white candlestick in and of itself has pushed up above our bullish trade, and it's closed at about $15.66 at the moment. This trade is very profitable for a lot of people in that analysis workshop class. Congratulations on placing the trade. I just wanted to reference this to begin with. It is really the only trade which has triggered so far this week. We have a lot of individual trades that are both bullish and bearish, depending on which direction the market actually wants to break. It may not break this week, but there's a very good chance that it actually will, one direction or another. This is a great trade, however, just to start the week off. A very nice bi-directional trade set up at this support level with ticker symbol SLV. Our first target is up here, about $16.12. Probably get there over the coming days, just like we did in mid-March when we had a similar bounce off from this support level. As you can see, we've been rallying into support really since late October 2014, down around this $15 area. We've hit it many times. We've hit it once, we've hit it twice, 3, 4, 5, 6, and this is really the 7th retouch of the support level. You can see that resistance level also coming in, as I just referenced, about $16.20. That's why our target is just below that resistance level right there. There's a lot of debate at the moment saying, look, is this a head and shoulders chart topping pattern? Well, if it is a chart topping pattern or a terminal reversal pattern, it should be occurring up at resistance. That is not the case, unfortunately. It's more so happening down at a very strong support level. So it lends me to say, well, maybe this is some long-term accumulation taking place on silver. Immediately, however, I do believe silver and gold, for that matter, hasn't put in a base, or it hasn't put in a bottom yet. So although that we are short-term bullish on the price of SLV up into a resistance level, I do think more so on the intermediate and primary trend level that we are going to eventually break below the support level and most likely push down to around that $12, $13 area once we break the support level down here around $15 a share. So I just wanted to reference that silver trade. Congratulations. If you have any questions on that particular trade, please email me success@pivotpoint-trading.com. Outside of that particular ETF, you can see on the markets we really had somewhat of a flat day. The Nasdaq was more or less the inception or the exception. I will get there in just a moment, but before I do, let me just have a look at today's daily candlestick on the Dow Jones Industrial Average. You can see the body of the candlestick is actually engulfed Friday's candle. We do have an upper week and we're still not breaking above our danger zone. We've had this danger zone drawn on the chart since this high over here. So if I change my color to red, we can say that this level on the chart right here is a very hard time to be a buyer in the market. It isn't the smartest time to be a buyer. There is a lot of risk going on at this level in regards to resistance and selling pressure. Now, as you can see on the Dow Jones, it tried to push up intraday. It failed, and instead it sort of more so closed around the lows of Friday's trading session. It is a bearish candlestick. I'm going to pay attention to the daily volume once it comes to me, but the actual candlestick itself isn't really giving us a whole lot of confidence to be looking at bullish trades at the moment. The same is true with the S&P 500, a very similar type of candlestick. We did push back into this resistance level, this danger zone. Made it very clear to people over the weekend that I wouldn't be placing long trades on the SPYs, the Qs, or the diamonds. You'd be more so inclined to be trading the rollover trade at this resistance level. This looks as if it's starting to materialize as at the close on Monday's trading session. If we have a look at today's candle on the S&P, it is what we call a very nice engulfing candlestick pattern. This is the signal saying, look, hold your horses, this market is really struggling to push higher, and there's a good chance that it is set to roll over. So please pay attention and to any continuation lower, which may stem from this individual candlestick. A nice little candlestick on the daily, but really the most significant move, or the most bearish type of signal that we have received so far, is definitely on this Nasdaq market. You can see that today we have had another bearish engulfing candlestick, and we have filled this gap. Not only did we see a small gap up and almost what we call, you know, a doji or almost a small wave spinning top candle, this candlestick right here is extremely bearish. Now, when you sort of mix it with the candlestick on Thursday, you start to see a pattern. It's what we call an evening star pattern. It's not, you know, a signal that you go by in this particular instance because it's very messy. You really have to get a little bit creative to actually make out this candlestick pattern, but it is very cautionary, at least to the bullish side. Again, I've been stalking Q trades, I've been stalking diamond trades just as a good entry to get into on the event, or in the event that it rolls over. You can see my entry down here at 107.46 on that particular trade. You can see on the diamonds as well, these 2 or these 3 entries that I've just been bringing up slowly in the event that the market decides to roll over. This is the first candle saying, look, there could be a bigger move, just around the corner. We'll soon see. We've been very neutral in these markets. Again, a symmetrical triangle taking place. We're not breaking outside of the markets, but it's just a good indication of, look, that the markets, there is no trend going on. We are range bound. We are continuing to be in this consolidational type of behavior, and it's frustrating until we break out. That's really what it all boils down to. In the way of other trade setups, I'd like to invite you into that pro analysis class. I won't reference, of course, any of those trades, and I won't reference any of those trades on this YouTube channel. What I'll simply do is, again, just go back and look at those individual trades which have triggered and speak about the target and, of course, stop placement. I didn't actually talk about the stop on SLV. If I was to place a stop, I'd place it right below the gap down here, about $15.12 at the particular moment in time, and just see what happens over the coming days. But a very good chance to come up and hit our first target at $16.12. What I'll do right now is leave this Monday afternoon recording. Oh, pardon me. Before I do say goodbye to all of you, Apple has just reported its earnings announcement. Obviously, duh. That's why another reason for this Monday afternoon market recap. Apple has reported its earnings. It is up, I think, $2 at this particular moment in time, up about 1.3%. We are trading up about 130, what is it, 134 and a half, 135, I think. So it looks as though at the moment we're going to see a gap up on Apple. Don't jump into this trade just yet. Let it form on Tuesday, and then I'll give you an analysis on the gap, if there is one, or the actual candlestick Tuesday afternoon in the pro-private area. It'll be very interesting to see. I've said this a lot. I think how Apple goes, so will the market. And I've referenced and been referencing just how stuck these markets are, how there's no directional type of movement or directional trend in effect at the moment. Apple may be the stock which breaks it out. Now, a $2 move to the upside at the moment isn't stellar. It's not as if we're seeing a big Amazon gap up or a Google gap up continuation type of trade. It's only $2, and here we are with a $132 stock. So you can see it's only just over 1% move at the moment. But pay attention to this on Tuesday. Interested to see if it has any commitment to the upside, or if in fact it gets sold on the gap up, like a lot of individual stocks have over last week's reporting week. So just keep that in mind as well. There may be a little bit of market noise and volatility to begin Tuesday's trading session. All the best traders right around the world, have a fantastic Monday evening. I'll see you all most likely Tuesday afternoon, definitely Tuesday afternoon in the pro-private area. We'll see what the markets do and whether it dictates me producing you another market update as at Tuesday, a public one on this YouTube channel. All the best, everyone. Have a great Monday evening. Goodbye.